following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Kevin in Orlando. Hey, Kevin, what's going on?
Hey, I'm doing great. You know, I am addicted to TFNN.
We appreciate you growling and prowling with us out here. It's a great network, man. And I want to thank everyone out there, for making it a great network.
Well, it's great because I do outside sales, so I get to have the station on my phone the whole day. And when I go pick up the kids from school at 3 o'clock, they all love it and giving the old wow. Educating the kids at a young age is a good thing.
Now, Tom O'Brien.
Wow! Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. I'm focusing on getting rid of this cold right now. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Love coming out of you makes you happy. The whole world can love you, but that is not the love that will make you happy. What will make you happy is to share all the love that you have inside of you. That is the love that will make the difference. Market-wise, let's take a look at it out here. We have the Dow Industrials down 300. NASDAQ's off 122. S&Ps are down 31. Gold contract up $8.40, trading at $1,330 an ounce. Silver down a penny at $17.77 an ounce. Platinum down $5 at $9.79 an ounce. Copper up a penny at $2.12 a pound. Light sweet crude down $1.16 at $46.48 a barrel. Bonds. Okay, 10-year bond up 29 ticks, 133.09. 30-year bond, folks, up 3 full points and 3 ticks, 173.02. Notes and bonds continue higher. Wide price spread, accelerated volume, all of the above. Bottom line, folks, rates are going down, big time too. That 30-year bond, folks, wants to run into the 180s, and we're at 173 right now. King dollar's up 1,091 ticks at 96.66. The euro is trading at $1.10, and the yen is at 101. Our phone number is 877-927-6648. Give us a call, folks. I want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Excuse me, folks. So, you were down 390 today. You're at 199. You've broken the swing point that we were going after, which is the 19th of May. That swing point there at 115 million. We've done 172. What are we doing here? Okay, so your larger issue is you're going down into the October swing lows. That thing is game in a big way. So the high of that low is 187. The low is 181. NDX 100. Let's go over to the NDX. We'll take a look at the NDX. NDX 100, same type of setup. You're down 231 on the Qs. You broke the swing point, did it with volume, all of the above. The October swing lows in the NDX 100 are the 3 Qs. 97 is the high of that low. 94 is the low. Gold contract. What do we have with gold? Gold, folks, is in a larger ABC structure on the way up. You're at 1330. This contract is in a ABC structure of 1412. Bottom line, you get wide price spread, you get the volume, it's over the highs, all of the above. Now that's a long-term structure, but we're in the C to D right now, and that C to D of that ABC structure, that's when you get the straight line moves inside the marketplace. The notes, let's go take a look at the notes. What do we have with the notes? Okay, so the 10-year note today, you're up 29 ticks, you've done 1.1 million contracts. Bottom line, higher prices are coming at us. The 30-year, so and you talk about the 10-year rate structure, we're at 1.458 right now, folks, on the 10-year. On the 30-year, check this out. This is pretty intense. We're at 2.28 on the 30-year. On the 30-year, that's unbelievable. So we take a look at that 30-year. Now, when you put the 30-year on a continuous contract, we're right at the highs right now. These are all-time highs, by the way. When you do put this on a continuous contract, it sets up getting up into the 180 area, which is, yeah, I know, When we start talking 170 area months ago, that sounded insane too. But guess what? That's where this thing wants to go. You can make the case. Now, what happens is this. Inside the continuous contract, it's hard to get in hold of volumes, folks. But if we just do the A to B equals C to D on the move that started in November, you're getting up into that 180 area. So that's about as intense as you get. And it totally makes sense, by the way, because if we go over and take a look at the Fed funds futures rate, what you're going to see on the screen, that in July, the probability is 0 of a rate hike. In September, it's 0. In November, it's 0. In December, it's 7.7. And next February is 9.2. Bottom line is that just looking at the world in general, these rates are going nowhere but down. If we go take a look at what we did happen in Europe out here today, you had the CAT in France is down 2.9%. The DAX is off 3%. The FTSE is off 2.5. Right now, our markets, we have the Dow off 1.6, the Nasdaq's off 2.5, and the S&Ps are down at 2.1. What you did have in the UK out here today, bank-wise, was pretty intense. You had Barclays down 17.5 and UBS off 20. That is some big numbers, folks. You're talking about Barclays, one of the largest banks in the world. Barclays was trading at a price point of 187 3 days ago. It's at 127 right now. That's pence, by the way. But bottom line, percentage-wise, it's still big, big numbers. We go take a look at, let's go over to the oil market, CLQ. The oil market's breaking down also. So oil out here, what we have with the oil market, we're down $1.25. You've done 467,000 contracts. You're breaking the swing low of the 16th of June. That sets up a 44.12 right now inside the oil market. And what we have out here, folks, okay, this is where this downtrend hasn't produced any fear, which is pretty amazing. So the trend right now is 1.75, was 2.2 on Friday. The tick, we had one down tick today of minus 12.73. That's not even close. That is not what makes bottoms or even bounces happen. The VIX, okay, which is really, this is about as deviant as you get. The VIX, folks, went down today. We had a high of 26.72. You're at 23.62 right now. That's just going to show that the fear is not in this marketplace. And if you don't get fear in the marketplace, guess what? You're not going to get a bottom. Our phone number is, well, we'll get a bottom at some point, but not right now. Our phone number is 877-927-6648. We go take a look at some of the higher volume stocks, and we are going to have high volume again, once again today. Friday, it was just monster volume, folks. We did $2.5 billion on the NYSE. You did $4.4 billion in the NASDAQ. There's never enough room for markets when folks want to get out. Some of the higher volume stocks out here, Microsoft down $1.50. JP Morgan's off 210. You got Applied Materials down 96. American Airlines down $1.66. Our phone number is 877-927-6648. Give us a call, folks. Coming right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We have the Dow down 304. You get the NASDAQ off 124. S&Ps are down 32. And as we do each and every Monday, we get our man, Mr. Steve Rhodes. And don't forget, folks, at TFNN, Monday, Wednesday, Friday, we do live programming from 8 o'clock in the morning to 5 in the afternoon. Tuesday, Thursday, 7 o'clock in the morning to 6 in the afternoon. Steve's got a great show on every trading day, 1 to 2. And you can get that right on your cell phone at TFNN.com. Hit Tiger TV. You're going to get great audio as well as video. Steve has a great newsletter, Mastering Probability. Now, the way you get this, you can test drive it 30 days, absolutely free. You go to TFNN. You're going to hit newsletters, trading newsletters. You can test drive Mastering Probability 30 days, absolutely free. Steve Rhodes, what's going on?
Oh, summertime cold. Those are so...
I know. What a trip, huh? So weird, man. I'm telling you.
Yeah, no, I know. I had one a couple of weeks ago. I don't know, maybe 3-4 weeks ago. And they're just, and it lasted for a while. And I never get colds.
Well, I'm getting rid of this freaking thing. And folks, I sound worse than I don't feel as bad as I sound. I can tell you that.
That's good. That's good. Well, I feel for you. And since that's the theme, we're going to stick with the theme today. And so the question that I pose to all of our listeners, all of our viewers out there is, can one world market give another world market a cold? And so we'll start. And so you're the one, we just
sure.
I got to. Yeah. So the Shanghai, the first chart that we're looking at, we're going to compare everything to the S&P 500, which will help us to get a perspective as to really where we're at with regard to the UK. So this is taking a look at the S&P 500 top of the chart and the Shanghai down below. And what we can see here is that these two markets don't really correlate that well. And in the U.S., the S&P 500, you can still see prices still above its rising trend line from 2015. We certainly saw the Shanghai get a huge cold back in June of 2015. It took until August of 2015 for it to really spread to the United States, and it didn't really last that long out here. But it was a pretty nasty cold out there. The next market that we're going to take a look at is the Hang Seng.
Okay.
Now, the Hang Seng has a pretty good correlation to the S&P 500. Again, in this case here, the S&P 500 is at the bottom of the chart. We can see that the Hang Seng had broken through its longer-term trend line, unlike the S&P, which hasn't done that yet. And we can see that from the high that it created back in 2015, what's interesting about the Hang Seng is it's actually broken through its descending price channel. It's got a lot of work to do to the upside. It still hasn't, it's nowhere near taking out its February lows. So we still want to keep an eye on the Hang Seng. Real problem exists for it if it gets below the 18,278 level. That's its February lows. But fairly decent correlation between the Hang Seng versus the Shanghai in the U.S. The Nikkei correlates pretty well to the U.S. stock markets. You're not going to say the exact same movements, but in the case of the Nikkei, after that huge move off of the 2011, 2012 area, we can see now that it has a lot of work cut out for it if it's going to get its act in gear. It's in a huge descending trend channel. I don't have the channel drawn, but we can see the trend line up at the top. And the Nikkei last night had a nice bounce. Not as nice as the decline that it had, but it's the one that perhaps is going to be the first to go after that February low. So what people should be watching for tonight for a clue, just simply because of the correlation with our markets, is does the Nikkei go ahead and actually take out the February lows? Because it's not that far away. Just needs several hundred points, in order to get down there. So I think on Friday you might have mentioned that the volume as it was coming down in the Nikkei might have been a little bit light. So that would also make sense with regard to the bounce that we saw yesterday. I don't know, or this morning. I don't know what kind of volume we saw in that bounce. Maybe it was even lighter there. The DAX. The DAX has a really nice correlation to the S&P 500. Now, the DAX has not broken its rising trend line, the green line on the bottom of my panel, off of the 2009 lows, just like the S&P 500. However, the DAX, as our markets made a top in May of 2015, the DAX did as well. And it's still in that descending trend mode out here, whereas we've really been consolidating. The S&P 500, as you know, has been consolidating for really since 2014. The mid-2014 time period out here. So we want to watch the DAX also to see, if it starts moving lower, our markets ought to move lower, just simply the price correlation that we have. But that takes us to the real market out here, which is the FTSE. And the FTSE correlates very well with the U.S. stock markets. The FTSE, what's interesting, you can clearly see the descending trend line, and we can see how prior to the Brexit vote on Thursday, it had made its way all the way back up to the top, and then clearly got punched down. So I believe that what we want to be watching for is how does the FTSE trade when we come into the come into our office at 5 in the morning, 6 in the morning tomorrow, because if it's moving lower, there's a really good chance that we're going to see our markets move lower as well. And this is the number. These are the numbers that I believe that people should be watching for the FTSE, because the chart that I have on my screen shows our horizontal trading ranges, Tom. These show both our monthly, which is the left-hand panel, and they are the red lines. The green lines are the weekly horizontal trading range, because a monthly candle session is going to close different than a different price level than a weekly, and a daily is going to close differently for the most part than a weekly or a monthly. And so what my system does is automatically goes out there and finds the largest number of co-located, means it doesn't matter whether it's an open or close. And when it finds the largest number, that's when we know we've got one of our trading range levels. And on the monthly chart, the largest number, this goes back to 1984, 1985. And the largest number of opens and closes on a monthly basis happens to be around the 58.83 level. There have been 22 during that time period. So we had the FTSE close at 59.82. That 58.83 level is a real key area to watch. Now, interestingly enough, price came down on Friday, tested that area, rejected it, bounced up. On the weekly basis, its largest number of opens and closes, there's 32 of them, that occurred at the 58.69 level. So 58.70 is the number that I'm saying people need to watch. So 58.84, 58.70. The daily price also came down, and it tested its primary horizontal trading range, 70 touches, 70 closes, opens or closes, at the price point of 58.68. So we'll get a really good feel just simply by understanding the correlations between the FTSE, the U.S. stock market, and then what happens at these horizontal trading range numbers. That is what I believe that folks should be taking a look at. And when we take a look at the Great British Pound, because that certainly is going to influence the UK market out here, the levels that we're watching here are really the 130 area. 130 represents a potential support area for the monthly chart. If we see a break below that, then the weekly chart is suggesting we'll see a move down into about the 126 area, and the daily says about the. Yeah, absolutely. Well, maybe we'll get it back to 1-to-1. Because the last time I was over there, it was pretty much the same price for a meal as it was in the United States as it was in Great Britain, in London.
That's amazing.
When I say the same price. Until I had to go ahead and pay in U.S. dollars, then it was double.
Oh,
or 1.5 times.
Okay. Right.
Yeah. So it's cheaper certainly to go over there, but their beer is about the same price of a beer that's on our menu out here. At least that's my recollection.
No, it's expensive. There's no doubt, man. There's no doubt.
Yeah. So it sounds good.
Listen,
so
folks,
I hope you feel better.
Yeah, we're gonna make it happen.
All righty.
Folks, come over to our website at TFNN. You go to newsletters, you go to trading newsletters, you can test drive Mastering Probability. 30 days is absolutely free. Steve, thanks so much, man. Have a great one. Have a safe one.
You too, Tom. Take care.
You stay right there, folks. We're coming right back. Dow's down 307. NASDAQ is off $127. S&Ps are down 33. We're going to be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited-time, 5-year, market-safe currency comeback CD. This indexed and U.S. dollar-denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY, or periodic rate of interest, is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com/TFNN now. This advertisement is sponsored content. Everbank is a member FDIC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So let's go over to the XLE. We take a look at the XLE right now. So XLE, folks, down 233. You're at 64.43. You've broken the swing. The swing point that we're talking about is $65.34. Now that had 19.9 million. You're breaking this swing and you're doing it today on 17 million. Friday we had 26. So what that's going to set up, you're going to get a little support here around this 64 area, because the XLE had traded there for quite a bit. So we'll see how that bounce comes out inside the XLE. It hasn't bounced yet. I figure it's going to get a little bit lower. It can even get to 62.46. Then you're going to get some kind of a bounce. How we bounce out of here, by the way, and I don't expect we're going to be bouncing right now, but how we bounce out of here will tell us how fast and furious we're going to get down into the the January and February lows. If we go over to the XLF, the banks are in big, not only in a downdraft, that thing is fast and furious. You had the XLF close on Thursday at $23.23. It's at $21.37 right now. It has the volume. Excuse me, folks. This also is coming into some support right now, the XLF. Bottom line, I was a short the XLF. We closed this position as well as FAZ at 2 o'clock today. And where my head's going with this is this. You are coming into the March 1st level, which we had 81 million shares. You're doing 92 million. You're coming into the February 3rd level, where we had 123 million. So what I'm expecting here for the banks somehow is that those babies more than likely are going to get some kind of a bounce tomorrow morning. Now where's it coming from? Who knows? But what does happen is that if we go over to the Europe for a second, and this is where I'm getting this from too, by the way. I'm going to bring Barclays up for a second, so you can see how this thing is shaking out. Barclays, this is like destruction extraordinaire. So Barclays, folks, as I said a little bit earlier, went from 187 down to 127 in 3 days, okay? If we bring this back and you put this on a monthly basis, what it's doing is that it's going right into the lows of 2009. The low is 43. The high of that low is 163. Now, you get volume coming into it. We're also coming into the low that was generated out here in September of 2011. That level there, also, it's going to blow that level away with volume. Those two other levels, I don't see it, number one, going down to the lows. It can, it can get to that low. I just don't see it happening on one swoop down. When you come down like we just did in 2 days, that central bank over in the UK, I suspect, whether it's tomorrow morning or the next morning, something's going to come out of left field, and you're going to see those banks bounce. If you were around, whether it's in 1998, whether it's in 2004, whether it's 2007, bottom line is that the banking structure, they got to do something, they got to do it quick. All that does, by the way, is just gives the banks a bounce, and then they'll sell off again. And if you remember during 2008, they stopped people from shorting the financial stocks. Well, it didn't stop the downdraft in the financial stocks. It's not going to stop them, okay? What it's going to do is it's going to bounce, and then it'll go south once again. One of the Tigers was saying, was wondering why the banks were so low inside the UK. And it has to do with interest rates, folks. It's all about interest rates. And, what you have here is that these rates, the 10-year right now in the UK is 0.9%. 0.9%, man. I'm telling you, get into hard assets, folks. We're going to get bounces, but hard assets are going to be worth a fortune. Let's go to Rich in Oregon. Hey, Rich, what's going on?
Tom, thanks for taking my call.
Sure. How you doing, man?
Not too bad. It's sunny and warm here.
That's a beautiful thing.
Not quite like Florida, but sunshine.
Florida's a little too hot right now.
Okay. Question, with the dollar strengthening, is that going to drive the major gold miners down? I particularly was looking at Gold Fields, which is a South African miner, and I just thought from the sounds of things, interest rates are not going to go up, like you say, and the dollar seems to be strengthening because everyone is rushing into it. how will that affect Goldfields?
Well, this is going to affect everything. Okay, so the gold report goes out on Mondays, folks, right? And I brought this up in the gold report today. I am not the believer that gold and the dollar can go up simultaneously. So we have gold in an ABC structure on the way up. We have a dollar that is strong and does want to go higher right now. So I expect the next couple days to be kind of dicey out here. This dollar looks to me like it wants to try to test between 97.31, which is the low of February 3rd. Now, February 3rd, folks, is where the dollar got trashed. It went from 98.91 to 97.31. And that's in the same instance, then it tried to get higher again on the 10th of March. It went to 98, and then it gave it up and was 96. I think we're going to try to get up into those levels. So what that would do is, it hasn't done it yet, okay, but that would be saying that, okay, that should put some pressure in the gold market. Well, it hasn't, If we go over to GFI, now, do you own it? Are you looking to buy it? What are we doing here?
I own it currently.
Yeah, I'd stay right there. GFI is in an ABC structure on the way up. And
would you buy more if the dollar does test the 97, 90, or 98? Would you buy more at that point, or wait for another signal?
Is this of GFI?
Correct.
When you were first getting into GFI, did you plan on buying more?
Well, perhaps not.
Okay, then
you got me there.
No. I don't want to get you. What you want to do is that, folks, there's going to be a lot of money to be made here, and gold and silver and all that, right? What you want to do is just set these trades up and just stay focused, right, and not get greedy, and set it up before the fact, okay? So I wouldn't do it just yet, okay? Because there'll be pullbacks. Now, with GFI, you can go to the South African Exchange in the morning and see how it's trading, right?
Yes.
Cool, man. Okay, awesome. Because even if you're not trading, folks, South African stocks, you should go there and see how this is trading, how Harmony's trading, how Anglo's trading, because you'll get a decent understanding of how the gold stocks are going to trade, because they're trading already live, so. Cooking, brother.
Okay, thanks, Tom, very much.
Okay, man.
Hope you feel better.
Have a great one. Have a safe one. Thank you. So, we'll see where this, where the test in the dollar is versus where gold is going. Right now, people are buying both of it. There's no doubt about it. I don't see that continuing. Gold, commodities are priced in dollars. Our interest rates are going to stay low. As our interest rates stay low, right, all hard assets are going to be worth more money. Paper assets are worth less money. That's it. It's a beautiful thing. You stay right there, folks. We'll come right back. Dow Industrials right now are up, down 259. Nasdaq's off 114. We're going to be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Dow right now is down 244. You get the NASDAQ off 109. And you can expect a little more bounce as we come into this close out here today, folks. Bottom line is the markets want lower price, but, guess what? There's been a huge amount of bread made on this short side here, and I suspect, you got to remember, we're coming into the July 4th holiday. The July 4th holiday in itself can get a bounce going. When you take a look at the Dow, we just went from 18,000 to 17,063 in 3 days. So, we'll see how this shakes out, but I do expect you're going to get some kind of little bounce here. Inside the Dow Industrials, what we have, the strength versus the weakness. And if the way you should be trading, by the way, intraday, is you don't have to close the positions. You keep bringing the stop down. That's how you do it. If you go in the long side, then you keep bringing it back up if you're trying to get a bounce. You don't have to get out in a highly volatile market like this. In fact, you shouldn't. What you should be doing is just bringing them down or bringing them up. Inside the Dow out here today, you get the only stock that is, two of them are positive. You get Verizon up 0.6%, and Johnson & Johnson is up 0.5. American Express is down 4, DuPont's down 3.4, Bank of America is down 2.8. Let's go to Mike in Toronto. Hey, Mike, what's going on?
Yeah, hi there, Tom. Sorry to hear about your cold. You have a head cold or something, or what do you have down there? Sorry, heat?
No, listen, just it's a cold. It's yeah. We'll get rid of it.
Yeah. Okay. I want to play contrarian here.
Okay.
And do you see a inverted head and shoulders on the NDX on the weekly? And I'm gonna hold your hand here and feed you the
NDX 100, right?
Right. So the October 2015 low.
Excuse me.
4,053.
Okay, 1 second.
February 2016 low 3888, and today's low, making it a higher. The right shoulder will be a higher right shoulder.
Okay. Yeah.
Okay. So what's the neckline and projected the upside?
Well, I can see that, but I don't agree with it. But I see what you're looking at, But
assuming I'm occasionally I'm right. So let's just play
you're
this
right
out.
all the time. I'm just, what technically it wouldn't be, but what happens with Head and Shoulders, folks? Okay, nothing is scientific here in technical analysis. Okay, it's like an art form, really. The head is higher than your shoulder you're talking about. Your shoulder, from
the right shoulder
from August is like a disaster. It's down to 3,700. You see what I mean? But so let's stay there. And I'll give you the neck anyway. If you still want to deal with that, your neck is 4,045.
Okay. And projected upside?
Well, you would take the bottom of that, and then you take the top, which would be 4,739. And you could add 700 on top of that.
5,400. Wow. Okay, that's 5,400.
We're not going there, man. I just go over to Google. I mean, I don't know why you're trying to, you know. Well, it's important to do both sides of the marketplace. Just go look at Google. Google's blowing through the February lows. What you have here is that the market itself, as the market has come down, Google's probably going to tell us that the S&P is not even going to hold the lows of February and January. And we'll know. If this breaks, if Google breaks the next few days, see you, don't want to be here, man. We're going a lot lower. So, but it's not the end of the world. I mean, you know, so.
Yeah. Another thing is, you never talked about this gold stock. It's called DRD.
Oh, I know DRD upside down. Oh, you kid. Oh, this is so funny. You've been listening.
Yeah, but you never talked about it on air.
Yeah, but do you remember? I think you've been listening to us this long. This is one of the first ones that we ever bought. This was Drewy. Remember we called it? Oh my God, this is sick. So, this equity here, right, has. Excuse me, folks. Okay, it's up 3 cents. Yeah, this is so funny, man. I think the first.
Look at the yield.
Yeah, no, I know this stock well. I interviewed the CEO a dozen times. I don't know who's there now.
Yeah.
So this stock here, Droopy. Thank you, Gator. That's what we used to call it. We used to call it Droopy, man.
Why?
They own the largest gold mines that are the deepest in South Africa. So what happens is that the price of gold has to get astronomically high in order for this stock to make money. So like when you look at it, look at this. This is pretty sick. So.
But where are they getting the money to pay the dividend?
Well, they're probably borrowing it. So they're paying a 4.3% dividend. Don't buy the stock, man. I'm telling you.
No.
Well, yeah, look at it. I just put this back on a longer-term basis. We kicked it out. This thing, so when we did score on it, okay, the thing, excuse me, it started off at like $8, but this is split adjusted. It went up to 58, and then it imploded. It went from $58 down to, I don't know, $1.45. Don't touch it, man. I'm telling you.
Yeah.
There's plenty.
Look at the volume. Look at the recent volume since January.
You know what? There's so many good gold stocks out there, man, that you don't have to touch it.
Okay, I will. Thanks a lot.
Make things easy for yourself, man.
Sure.
Totally.
I'll avoid it. Thanks a lot.
Have a great one, man. Have a safe one. What happens, folks, is that particularly if you happen to be in the metal market, right? What you don't want to do is when these metals are moving, your equity should be moving. And if they're not moving, that's when it's time to get moving out of that, okay? Doesn't mean that it's not moving every day. But when they're not moving as the other ones are, it's important to wrap your head around that, man, because, yeah, no, we didn't get too many gold calls yet. Not yet. One of the Tigers saying, are we getting too many gold calls? Not yet. You know what the thing that's amazing is that what has also happened is that gold's still not plastered everywhere, folks. We're in this larger ABC structure on the way up, but I think we're going to have a little, excuse me. Excuse me, folks. I think we're going to have a little tough time with this dollar in the next couple of days, because what I'm looking at right now is that this market looks to me like you're going to have some kind of a bounce, and more than likely going into July 4th would be a decent one. So we'll see whether they flip everything right around, and if the bounce is with lighter volume, great. Friday, when we're going on vacation, you can sell the heck out of the whole market again. Volume-wise out here, what we have going for us right now, you get 972 million versus 2.5. And the NASDAQ, we are dealing with 2.2 versus 4.4. We had a question about why Great Panther is stuck. Yeah, I agree. I own Great Panther, but there's no doubt. It's like, okay, man, you got to catch a bid here. It has a high volume. This is GPL. Okay, it has a high volume high of this 225, but it's like, what are you doing up here, man? So I've been watching this baby all day, and it's like, okay, it's almost like it wants to get back down to 136 first, before it gets higher. This is Tom O'Brien. This is TFNN. Our phone number is 877-927-6648. Dow Industrials right now are down 250. You got the NASDAQ off 111. S&P's down 27. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Let's go over to the NDX and see the strength versus the weakness inside the NDX. So the strength out here is Tesla, and that dog has been down in an incredible way. So that's up 2.6%, or $5.27, trading at 198. That's after coming down last week from 222. So no big deal there. Excuse me, folks. The second mover is Whole Foods. That's up 1.7%. Coming downtown, you have Western Digital is down 11.6%. You get Seagate Technology off 9.4%. That's quite a hit for Western Digital. Yeah, one way. So Western Digital had gone to the top of its consolidation and couldn't make it. Western Digital might be something that you want to take a look at, folks, just so you can see when you don't make tops of consolidations. In this particular case, you talk about going south, and you can see the identification, because each and every time that we got to that top, meaning in February, then you come off the February high with volume. In March, you didn't. April, you come off downtown with volume, and now we're coming down with volume again. So this is setting up. Let me put this back further. Oh, yeah, this has been a dog. Yeah, so this is down. Oh, man, this is really a trip. This is down off a high of 114, and it's making its way. Yeah, this one wants to make its way into the $31 area, all the way back to 2011. Yeah, and it has a high volume low also from last month at 35. So there's more downside coming in that baby. As we come into the close out here, excuse me, folks. Let's see, what do we got? You get 4 minutes. You won't have the futures close. The futures don't close until, of course, 4:15. And what I expect you're going to see out here, you're going to see a small bounce, nothing heavy. But what you very well could get tomorrow morning, I expect, you know, the SPY right now is at that 199.57. Let's see. That can bounce to 202 pretty easy in the morning. That'd be interesting because we only started at 201 today. I see a gap down actually today. Intraday it got to 201.60. 202.72 is kind of the number, how these things can kind of shake out. Then that, if in fact we get that, that's not going to be the bottom, folks. This market first is going to go test those January and February swing lows. We'll see how they handle those lows. Watching Google is going to be a good one as to how it handles that low, because Google is at that low right now. And if Google's going to go break those lows, guess what? Google's not going to be the only one in town breaking the February lows. And that February low in Google is 663.06. So you know where Google traded today? $663.28. That's even more dangerous, by the way, because what happened is that it hasn't tested it yet. So it's going to wake up in the morning, have some sleep, and we'll see whether it's going to basically take it out. Because if it takes it out, then you're going to see some real trouble in this marketplace. And we'll go hunt a few others. What you want, if you're hunting equities, folks, you want to see how they reacted to the January and February swing lows. Those will release a huge amount of information as to how the market is going to react to those lows. When we go overseas, it looks like the DAX, probably in Germany, is going to be the first one to go after that low. The DAX in Germany right now is only 400 points above the low. So, above the high of the low. You stay right there, folks. You're going to be coming right back. Dow finishing down 263. NASDAQ off 114. S&P's off 28. We're going to be right back.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Alex in Newton. Hey, Alex, what's going on, brother?
Hi, Tom. How are you doing?
I'm doing great, man. Yourself?
I'm doing pretty good.
Good, man.
Subscribe for your gold report. I've been following you for a while. The first time I subscribed for it. And what I love about your gold report is that you give us a direction. You give us an overview of the whole market, and you leave final decision to us because you give a lot of ideas. After that, you can choose whatever you want to follow, whatever you don't.
Yeah.
That is great.
Okay, brother.
Thank you.
Have a great one, man. Have a safe one.
Thanks.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Assume nothing. Don't make assumptions. In any kind of relationship, we can make the assumption that the others know what we think. And we don't have to say what we want. We assume they're going to do what we do because they know us so well. If they don't do what we want, we feel hurt and think, how could you do that? You should know. Don't make the assumptions. Market-wise, let's take a look at it out here. We had the Dow Industrials down 260, NASDAQ off 113, S&P's down 29, gold contract trading up $760. How about $7.60 at 1,329 an ounce? Silver flat at $17.78 an ounce. Platinum down $5 at $979 an ounce. Copper up a penny and a half at $2.12 a pound. Light sweet crude down $1, trading at $46.72 a barrel. You get the notes. The notes are up almost a full point, 133.09. The bonds are up 3 full points and 5 ticks at 173.04. Both the notes and the bonds so continue higher, which equals lower yield, higher price, higher asset prices. King dollar up 1,026 ticks at 96.60. Now, King dollar has kept the bid, as has gold. One of them's going to stop, folks. You know, gold's in an ABC structure on the way up. I suspect it's going to be King dollar that does the stop, but we'll find that out in the next couple of days because King dollar's at 96.59. I expect it's going to try to test into that 97 area. The euro is trading at $1.10, and the yen is at 102. Our phone number is 877-927-6648. Give us a call, folks. You want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Okay, so we come down Friday from 210 to 202. Today, you go from 202 to 199. Bottom line, you're breaking a swing point. Do it with volume. Your large picture is that we're going after these swing lows that were generated out here in January and February. That's the 181 to 184 level. What we did not get out here once again, is any type of fear, folks. The trend is only at 1.73, which does not indicate any kind of a bottom. The down tick is minus 1273. That also doesn't indicate a bottom because the trend has to run up somewhere into the 350s for a couple days. The down tick's got to get minus 1400. Bottom line, if we go over to the VIX, this gets really decadent. The VIX actually went down versus going up. So no one's fearful in this marketplace, and what that just means is that the razor blades, excuse me, folks, are still out here, and the slicing and dicing is going to continue. Gold contract. What do we have with gold? Gold contract up $7. We are at 1330. This is an ABC structure. It's a confirmed ABC structure on the way up of 1412. 1428 is the swing point up there. So bottom line is that we're in the C to D right now of this ABC structure on the way up, and the C to D structure is a straight line moves, folks. Now, that being said, okay, I suspect the next couple days are going to be a little dicey, and this is why. If we go over to the dollar for a second, you know, we're coming into July 4th weekend. July 4th weekend, markets like to bounce no matter how bad markets are, and this is not a great market we're in. The dollar index right now is up 1,011 ticks. We're at 96.85. I expect this thing's going to try to get into this 98.50 area. I expect we're going to get failure up there, and the reason I'm saying a failure is that is right where it got trashed on the 3rd of March, 3rd of February rather, as well as the 10th of March. In both cases, you get a monster seller up at those levels. We go and we take a look at the notes. What you have with the notes, notes continue higher with wide price spread, volume, all of the above. We did 1.2 million contracts today in the notes. The 10-year note right now is trading out at 10-year notes trading at 1.45%. 30-year, you want to see something really wild, man. 30-year, folks, is at 2.28%. 2.28%. It's just amazing. And that's not going to stop. That looks like it's going to go under 2%, which is just wild. The silver market. Let's go take a look at silver. Silver needs a bid. So we have what silver is this. Silver got up and into its swing high on Friday. It has the volume. It didn't hold the price. The price we're talking about is 1806. I like how silver traded today. You did 69,000 contracts. So now, once again, you're pushing those highs and pushing with volume. That's a short-term picture. The longer-term picture on silver, silver is making its way up to the $25 area. If we pull this back a bit, what you're going to see is that it broke the downtrend that had started in August of 2013 and took it apart with conviction. It had the wide price spread, had the accelerated volume. Sorry, folks. Had all of the above as it went higher last week. We take a look at that 10-year for a second. What you have with the 10-year is this. That 10-year out there, we're at 133.10 right now. And if we bring this up and we put this also on a continuous contract, what you're going to see is that this is making the run for the 135.29 area, but the way this is trading, looks like to me it's going to blow that area away. That area was June of 2012. I don't remember the reach this low, but bottom line is that that's what that area is. And the way this is set up right now, that can just take that area, take that apart and take it apart in spades. I mean, big time too. The volume out here, what we did out here today, we did 1.3 billion versus 2.5 on Friday. Friday, had monster volume on Friday, folks. We did have a rebalancing, but bottom line, it really doesn't matter. What matters is that where volume goes, the markets go. What we did have out here today in Europe, this is the numbers in Europe today. The DAX was down 3%. The CAC in France was off 2.9%. The FTSE was down 2.5%. Our own markets, we had the Dow down 1.5%. S&Ps were off 1.8%. And then Nasdaq Composite was down 2.4%. If we go over to that composite and take a look at it, what you're going to see with the composite, bottom line, 3 days, you go from 4,900 to 45.74. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll come right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. 877-927-6648. Let's go take a look at, excuse me, folks. We're going to take a look at the transports out there. Now, the transports have been taking quite a beating out here. These are down 227 today. In 2 days, they came down from 76.52 to 7,093. So you're talking about almost a 10% move in 2 days. And inside that move, and this is going to be another one that's going right after the swing lows that were generated in January. So the next number, which we're not too far from right now, actually one more day like today would be there. The high of the January lows is 6,700. We pull this back a little bit further. Yeah, so we'll see how it hits it. As you come down into these numbers, folks, if we come down too fast, now watch how this goes. If this just goes straight down, the transports, we come down again and hit it, that means you'll get another big bounce. What markets, if they exhaust themselves either on the way up or the way down, that's when they run out of energy. And that is how the S&P traded when we came down in February, testing the January low. So I don't expect that's going to happen this time. What I expect we're going to actually see is that as we get into kind of like where we are right now on the S&Ps, you'll probably get some kind of a small bounce. The confirmation is that if, in fact, we get a small bounce, and it's on light volume, it's going to be really easy to be on anemic volume, by the way, on the bounce, then that is setting up a much larger ABC structure on the way down. Time-wise, what you have out here is this, is that we're at the end of the month, we're at the beginning of, let's look at this calendar for a second. Okay. So window dressing starts Thursday. Yeah. So this is pretty good, actually. You get window dressing starting Thursday. July 1st is Friday. So July 1st is going to be a slow day because that's the beginning of the July 4th holiday. July 4th is the holiday. Yeah, so you can bounce. This bounce will start by Thursday. It very well may start tomorrow. And then yeah, we'll get a decent indication of how that's shaken out. The volume was extraordinary last Friday, so on any type of bounce, it's going to be really almost impossible to get higher volume on the way up. So your definition of the ABC down is you come down with volume, you go up with light volume, you come back down with high volume, you take out the B point. What we have inside the indices right now is that we've already finished one ABC down. If we start getting multiple ABC downs, that's going to be really a big problem. Inside the gold market, we have a few multiple ABC structures on the way up. That is one small ABC confirmed, meaning it already took out a B point, inside a larger ABC structure on the way up. So if you go look at Franco-Nevada is at all-time highs. This is a big number. This is a big number if you're a gold bull or a metal bull. It's over the all-time highs. All-time highs in Franco-Nevada is 61. You're trading at 72. Franco-Nevada, folks, makes money on royalties. So they make money on the higher price of physical gold, and that is an indication that physical gold is going to continue going higher. Royal Gold, who had got toasted and roasted, made a huge comeback. Also is now on an ABC structure on the way up. In fact, multiple ABCs. And Royal Gold is also going after its swing high. We're only at 69. That swing high is 100. The ABC structure is like 91. So that's a nice indication. And then you have Rheingold Resources. Rheingold caught a monster bid. And Rheingold is at 106.90 today. That was up $5.73. You pull this back, and what you're going to see is that the all-time high in Rheingold is 127. Well, we're going for it. So, and we're going for it with monster volume. So the cool thing there is that larger picture is that the metals want higher prices, and that totally makes sense in the context that the interest rates are going dramatically lower, and this is right across the world too, by the way. You know, the kicker inside the gold market, I think, for the next few days are going to be like, okay, what is this dollar going to do? Because what I can't picture is that I can't picture it's going to be this easy that the C to D is going to run like the A to B ran. You know, because inside the gold market and the gold equities, the A to B folks never stopped. You know, we'll see how that shakes out. But if it runs like that, God bless all of us. Okay, but I don't see it happening that easy. It's just nothing is easy in the marketplace. You know, so there'll be a wrench in here somewhere. Let's go over to the small caps, the IWM. Excuse me, folks. We look at the IWM. That was down 386 today. You're coming into the 19th of May, that's swing point, and you're coming into that with monster volume. So right now what you have is that the IWM hasn't broken the swing from the 19th yet, May 19th. I expect you're going to see that, you know, because we had the S&P already broke it, the NDX already broke it, but it very well may do a small bounce first before it breaks it, doing an additional ABC down. So the IWM just finished its ABC down. And remember something, whether it's an ABC down or an ABC up, the extensions inside those ABC structures can go more than a 1-to-1 or 1.382. Yeah, you know, I'm not sure if one of the Tigers are talking about I was just bringing up the S&Ps. I want to bring this back a bit, because if I seem to remember right, see, this is setting up the same way again. This is pretty wild. Oh, that's not three black crows. What I'm looking for right now, folks, is three black crows. And what three black crows are is that I believe I remember them out here, and then they love to get tested. Thank you, IWM. Thanks, man. Appreciate it. Okay, so let's go over to the IWM, because these. Okay, so if I bring the IWM up, am I doing it on a weekly? On the daily. Okay, on the daily. Yeah, they're all over the place in here. Okay, so what happens with three black crows, folks, is that that's an indication that you're going to go dramatically lower, number one. They love to get tested. And put this on a weekly for a second. You can almost make the case that they did it on the weekly. They did it the week of January 1st. We come back up and tested them again. It looks like it's going to do it again. That's going to be pretty intense, man. Because what does happen with a three black crow, particularly after you get the test, it's hard to believe you actually can get a test of a three black crow, because what happens, folks, is that what a three black crow is that you go down approximately the same amount of points 3 days in a row, maybe 4 days, okay? I pick one day. And then you test that whole area, go all the way back up to the top, and then it lets loose again. This is Tom O'Brien, this is TFNN. You stay right there, folks. We'll come right back.
Today, many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited time, 5-year, market-safe currency comeback CD. This indexed and U.S. dollar-denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY, or periodic rate of interest, is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com/TFNN now. This advertisement is sponsored content. Everbank is a member FDIC.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. 877-927-6648. Let's go take a look at some of the, excuse me, folks, some of the Dow stocks out here today. You had Big Blue down $3. We had Boeing down $3.82. Let's go over to Boeing for a second. So you get Boeing off the high. You know, Boeing should hold the highs of the lows of February, and that's $113. We'll see whether that can happen. You know, it just came down from 134 2 days ago, so you're down $12, $14 in 2 days. And you get some juice underneath it. And there's not, what you also have, folks, is this, is that because we came up off the February lows so quick, there's not a lot of support on many of these equities on the way back down. We go look at DuPont was down, let's see, 192. You had Oxy down 215. Let's go over to the oil sector, oil and gas sector. So you had ExxonMobil down 53. Not the end of the world, by the way. This probably wants to trade somewhere to 84. Right now we're at 88, 86. Chevron, we take a look at Chevron. Chevron looks like it's going to hold at these highs just yet, right now. So this is going to get intriguing watching this thing shake out. Chevron had strength and still has strength at $98 to 100. Right now you're at 136. We go take a look at Big Blue. Big Blue had been on a decent run. And if you want to see something when it starts testing its highs and can't handle it, Big Blue is the one. You know, it got up to the 155 area and then just gave it up to 143. Volume comes out of the equity. You're going after the 142 swing point. So this 142 swing point is going to be crucial. You break that, and they, you know, the bottom line is that they all have these high volume swing lows, and that's where we're going. The real question is, do you get a bounce in the middle of this week, or you do not get a bounce? My take is that we are going to get a bounce on light volume. My take, actually, and it's going to get intriguing here, is that I think what you're going to have by tomorrow morning is something in Great Britain to pump up this market in the European Central Bank for these European banks. The European banks, folks, got taken to the woodshed in a big way. Let's go to Mike in Wilmington. Hey, Mike, what's going on?
Hey, Tommy, how you doing, buddy?
I'm doing great, man. Yourself?
Good, good. I'm the Verizon employee that we talked a little while back there.
Sure. How you been, man?
Good, buddy. Good, good. And we'll probably sound a lot better than you right now. But listen, Tom, I got a crazy question to ask you right now. What the heck just happened with TVIX after hours? That thing just went nuts.
Let's take a look.
And UVXY.
Look at that. Okay, so we'll watch this. So TVIX, folks, it closed at 323, and it's trading at 365. This is intense. Now the TVIX.
Look at the UVXY too, Tom. I mean,
okay.
I shut you down for 10 minutes, and I looked at the thing, and I'm like, what the hell just happened here?
Okay, let me go through this first. Okay, so this is Velocity Shares. It's based on 2 times the S&P short-term index. And the VIX, folks, went down today versus going up. UVXY.
I was just wondering if there's anything that happened, like, in the last 20 minutes.
Oh, I'm sure there is. I'm sure there is, and we just got to find it, because the UVXY also just went from 1472 to 1662. Yeah, there's something happening here, man, for sure. That does not happen. Yeah.
That's crazy, brother.
Yeah, that is. Let me just see here. So
I figured I'd call my man and you could sort this all out for me. I'm not in there right now, but you know what I mean? I thought saying that's something significant right there.
It is significant. It means that something is out here right now, folks, that I don't see it right across here right now. The futures are not going to open back up until 6 o'clock. And yeah, it's a big one. Because I believe that those are real quotes, folks. 368. Let me just see something for a second.
I've kind of been watching it, and then I went to the XIV, and that's doing the same thing on the way down, which is the opposite of this one.
Okay.
You know what I mean? That's actually down $1 in the after hours.
Okay. It looks like they're real quotes. What I have seen, and this is what you got to watch out for. What I have seen with these in the past, not just this, a lot of different ones. See, this traded to 368 today, and I'm trying to figure out, are these late quotes that are just getting posted right now?
Right. I hear you, buddy. That's why I was calling you.
Yeah.
Because it was just so weird. I don't see anything else moving on my screen, and I see these things going loopy. I mean, something like that would make like other stuff start tanking, wouldn't it?
It would. Yes, it would. Yes, it would.
Well, that's why I called you, my man. You sort things out for the listeners.
668. Yeah. Here, I know what we do. Let's just go. This would be easy to do. Okay, so the Qs closed down 202 at $102.22. So those are trading at 101.98. So those are down 20 cents. That's not the end of the world.
Right. And
the SPY closed at 199.60, and that's trading 198.83. So there is something out there, man. That's the SPY's down an additional 80 cents. So there's something out here, man, for sure.
Yeah. I'm listening to you since I signed back on here. I'm waiting for you to start talking. You're kind of talking like a bounce, and this and that. And I'm saying to myself, why isn't he saying something about what's going on here? There's got to be something happening.
Yeah. Well, you don't want to be buying the bounce. You want to be selling the bounce. Just so you know that, man.
Yeah, I hear you, buddy.
Hey, thanks for the call, Mike.
All right, pal. Thanks for your effort. I appreciate it.
Have a great one, man. Have a safe one.
Bye-bye.
So we're looking at, so both of those folks, and what was so weird out here today, there's no doubt, is that there was zero fear in the marketplace, folks. I mean, zero fear. And that's never good for markets that are trying to basically get any type of bounce going. The VIX actually went down versus going up. You know, now after the close out here, you know, yeah, you get the SPY closed at 353. It's trading at 198.84. Excuse me. That's still above the low of today. So we'll see where this baby shakes out at 6 o'clock when these futures open back up. Bonds continue for higher prices. These things just, the interest rate structure, folks, you can expect lower interest rates. I mean, this thing is, so when we talk about the Fed fund futures rate, right now, the July meeting has a 0% chance of a hike in July, a 0% chance of a hike in September, a 0% chance of a hike in November, a 7.7% chance of a hike in December, and a 9.2% chance in February. You stay right there. We'll be coming right back, folks. Dow Industrials finished down 260. NASDAQ was off $113. S&Ps are down 35. We're going to be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls. Now, Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. I don't think this is what triggered that downdraft, but what did happen, because the reason I don't think it did, folks, is that this was out in the news at 3:30. The UK was stripped of its top credit rating by S&P Global Ratings. The S&P lowered the rating by 2 steps to AA from AAA, citing the risk of less predictably stable and effective policy framework. In the UK, the cut also reflects the risk of market deterioration of external financial conditions. Bottom line, folks, that was out at 3:30, number one. Just so if you get your head wrapped around the S&P ratings, the S&P ratings might take, market-wise, they'll mean something on a small basis. Overall, yeah, it's not even close. You got to remember something. The S&P ratings, when all those housing stocks and all those mortgage companies, they said nothing is wrong. Okay, they're worse than a weatherman. I mean, the weatherman has been pretty good lately. Bottom line is that it's a gaffe. And if you remember this, in fact, this is a trip. Our own bonds, since they came out like 3 or 4 years ago and they downgraded the U.S. debt has only gone up since then. Okay, so the S&P, take them with a grain of salt. We'll find out at 6 o'clock how these futures are reacting. Now, this is where the deviance in the marketplace comes. The downgrade that is done with the S&P. Yeah, we're going to go overseas for a second because I'm going to show you this. So, what we had out here today, let me put all these up here. We're going to go to the UK and take a look at where these babies were and what had happened. So, you had some monster destruction out here inside the banking structure out here today. You had RBS, folks, was down 31% in one day. Barclays was down 26%. Okay, so I'm going to bring up RBS first. Okay, so Royal Bank of Scotland down 31 pence, trading at 174. It had been a low, so it closed last Thursday at 255 pence. It got down to 151 today. We bring this back. I'm going to put this on a 5-year monthly so you can see what we're doing here. Okay, so we're under, excuse me, folks. Now, we went after the lows. I got to bring it back more than 5 years. 1 second. I got to bring it back 10 years. Okay, so the low of 2009 is 100. We're at 174. The volume there is 486 million. Thus far, we've done 451 million. Oh, that's heavy, man. So, with that saying, we get plenty of days left in this month to go after that number first off, which is another 74 points down. That being said, you go after that number and the European Central Bank, okay, is going to intervene somehow just to get some kind of a bounce going. And the intervention may be just they don't allow short positions in the financial markets, meaning in the financials. If you remember, that's exactly what happened in the U.S. When the banking structure got taken apart in 2008, you couldn't short banks any longer. Now, what that did is it only made it worse because when someone is short, they have to buy the position back. If we go to Barclays, we take a look at Barclays. Barclays is running out here at, that was down 26%. And we bring this back, 2 days of monster volume. And this is coming into 2.6 billion, and this only has 1.4. Okay, so this is going to get interesting with Barclays. So Barclays, folks, let me just see this. calendar for a second. So, okay, we get 3 more days. Yeah, 3 more trading days. We've done 1.47 billion. You get to 121. You're coming into, Barclays is not going to break its bottom. So the top of that bottom, at 127, man, I can get to 108, I guess. My take is that these banks will bounce tomorrow. Not necessarily, by the way, Royal Bank, but Barclays looks like it wants to bounce. What you have out here, Deutsche Bank, you want to see something? This is going to get interesting. So Deutsche Bank, folks, this little baby had gapped under its swing low from February 9th today, has volume, but rejected lower price. Once this gets back inside $14.13, which I expect it will, let me put this on a monthly for a second. Ooh, man. Okay, so this had 108 million, and you went to 76. And it busted everything out. Oh, this one's a dicey one, man. 123 million, 108. No, this is going to bounce too. Deutsche Bank's going to bounce too. Yeah. So I think tomorrow morning you're going to see some action inside these banks. There'll be some kind of a, and these things come out of nowhere, by the way, in bear markets, folks. You know, we didn't get the fear out here in our markets, but I suspect we're going to get something happening that this thing can bounce. Meaning, because if we see the banks in the UK bounce, we'll get some kind of a bounce going. Tonight, that being said, though, tonight over in Asia, it's going to be a problem in Asia tonight. Well, we have, you're down 31 bucks right now, the Hang Seng. Last night, Friday, it came down with volume. It came down into that 21,000 level. You did 4 billion shares. Last night, we bounced on 1.8 billion. If we go to the Nikkei, what you're going to see, the Nikkei in Japan, that is the first indice to get down into the swing low from February rather. So the swing low is 14,865, and we got to 14,864. We did 2.6 billion versus 3.4. So you got underneath it by 1 point, and now watch this. Then you bounced last night on 1.6. What that's going to do, that's going to build more cause to try to break out those lows. Thus far, those lows held, and they held pretty good. You know, we got 1 point underneath it, and there is a lot of support for the Nikkei at this area. You know, it's going to take more cause to break the Nikkei down. The reason being is that the Nikkei had traded sideways from May of 2013 going all the way over to May of 2014. You had a whole year of trading right where we are right now. So I expect you're going to see some support at these areas. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
Welcome back, folks. Let's go to Rich in New Hampshire. Hey, Rich, what's going on?
Hey, Tom. How are you?
I'm doing great, man. Yourself?
I'm doing great. Thank you very much.
Cool, man.
You're not feeling too well today.
Yeah, I got a little cold.
Yeah, you got the Brexit flu, huh?
The Brexit flu. I like it. Oh, man. Wild.
We can't stay up all night anymore, Tom.
Oh, I can. It'll have it go away.
That's funny. I was calling up about Kinross, KGC.
Okay, let's take a look. You get Kinross Gold. The low is 131. The high is 582. Now, do you own this? What do we do?
No, just poking around. I'm looking at. I want your opinion. I'm looking at it. I'm thinking that it finished its first leg from that 582, pulled back. And in your opinion, have we started the next leg up, the C to D?
I think we have.
Okay.
You know. Now, that being said, I'd be really careful of this equity. I don't like this equity, man. So this equity here, right? This equity is all about Russia. Okay?
Okay. There you go.
They have to get the gold out of the ground in Russia and then get it out. Now, they do 3 billion shares and $3 billion, okay? They haven't got one of the largest mines open yet. I just don't see it, man. I mean, I see it, but if it opens, I can see Putin putting a tax on it that is going to drive them out of their minds. You know what I mean? So,
I do.
You know, short term, you're at 515, and I can see this going to 795, though. I mean, this thing wants to move higher. You know, but I'd be careful on a much longer term basis on this.
No, I'm going to stay away. As you just said, Russia. I'll stay away.
You know what happened is that, I don't know if you remember, we had Bob Buckham, who was the CEO of Kinross. I did an interview with him live, and it was so cool, man. And he was the guy that set this whole deal up in Russia for them. And he told the story, folks, on the air. It was amazing. And this is when Putin was just getting in business. This is like 10, 11 years ago. And what ended up happening is that they had already put all these millions, hundreds of millions into the project. Actually, by that time, he only put 50 or 60 million in. And then they changed all the rules when he went back over. And they thought he was going to go for it, and he didn't. And then he came back to the States, and then he resigned, folks. And then another CEO came in and then did the deal anyway, and then bought BGO on top of it. So it's like they're heavily invested in Russia, and they're heavily invested in a couple mines that they, we'll see whether I think the political risk is just too high. That's the key.
I agree.
Okay, brother.
Thanks.
Have a great one, man. Have a safe one. And what we do have, folks, is that, we'll see when these futures open back up again. Because what you did have is that after the close, at 3:30, S&P came out and downgraded the UK debt. Then Finch came out and downgraded it also. Bottom line is that I believe that our debt is at where their debt is right now, which is a AA versus a AAA. Is it going to make a difference? Well, inside the market thus far, the Qs basically off 30 cents from the close. They're down 207. The SPYs right now are down. They're down almost 90 cents. They were down to 199.60. So we'll see where that whole thing does shake out. What we do have is that the XLF, XLE, they both continue to want to get down into these high volume swing lows from February. One of the equities to keep your eye on big time the next couple of days is Google. If Google breaks out that February low, folks, that's setting up that we can get below those lows. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it. Take ownership of it and fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking to you right back here tomorrow morning, 8 o'clock. Wow! Go get them, folks.